oil marketing companies now are in a sweet spot. Why? Because GRMs are strong and oil prices in a sense are no longer controlled, which is if internationally oil prices they go higher, in India also oil prices will go higher. While markets may talk about that in the next 5 years EV will come out and the future of fuel retailing may change, but abhi Delhi dur hai. That is a sense which I keep on telling everyone who says that EV is the next disruptive wave. India cannot move to EV in 5 years or forget even 10 years. So let's talk about the value some of these oil companies have to offer, what is the way forward, and if BPCL is sold at the right price, what this could do to the sector. Mr. RS Sharma joins us now. Mr. Sharma, good morning. Thank you for joining us. When I speak to some market veterans, they are now using the word deep value in some of the oil marketing companies. Couple of years ago, there was a structural issue with their earnings. Now looks like all things are getting sorted both in terms of earnings and also capital allocation.
Thank you, Nikunj. Always pleasure talking to you, in back. And thank you for inviting me to this show. You are absolutely right. Now, a lot of stability has come. That regime of under-recoveries and compensation by the government and the upstream companies, that regime is gone. There's much more stability as of now in the downstream sector. So, but all said and done, because of uncertainties, we find the valuation of these companies do not represent the intrinsic value or the underlying fundamental values these companies have. Actually, the market cap of all the companies, IOC, HPC, BPC, should be at least twice than what it is now. Only because of the uncertainties, they still carry that the investors, they discount investing in these companies. I don't know what precisely you would like to know from me, but I'll be happy to respond whatever you want.
Well, you have so much of experience that I'm sure we'll benefit and our viewers would benefit more than that. But I want to understand from you, Mr. Sharma, that one side we say oil PSUs have deep value. But on the other side, if I look at BPCL, hardly any global companies have shown expression of interest to buy an asset like BPCL. Why is that?
I don't know, Nikunj, whether I'm sure we have not interacted on this subject. Right from the day the government announced, privatization of BPCL, somehow I have not been very enthusiastic. It is not Air India, Pawan Hans, that you can simply go ahead. Of course, there are a lot of obstacles and difficulties coming. BPCL among these three companies is the best in terms of efficiency, in terms of the asset base, in terms of the market share they have in the retail outlets business. So, and even otherwise, they are fairly diversified. Their upstream portfolio is doing very well. They have share in this Petronet LNG. So, from all accounts, I rate BPCL as a very good asset. And personally, I feel the government is going to have difficulty in realizing the value that they would have in mind. The present market cap, I would say, the intrinsic value has to be double than that. Whether the government will be able to realize that. And again, you are right. There has not been enough interest from the companies because the way this sector has been handled by the government, perhaps they feel that fair deal will not be done. Companies like Reliance, they backed out. The other major the companies, for any international player, India is a very good captive market for evacuating their products in the business, and demand has not been a constraint, will not be constraint. That is absolutely right. But the issue of getting a good value, that is a question. Second, I'm deeply worried about destabilizing this sector. In case one of these three companies is privatized, I feel a lot of destability will come. Right now, these three companies, they work in absolute harmony. They share their infrastructure, pipelines, tankages, products, and they make sure that in the most challenging, difficult times, any nook and corner of this country did not have any shortage of the petroleum products. It is because of the synergy they have and the efficiency they have. I have huge respect for the technical competency, professional competency in these companies. If one of the company gets privatized, personally, I feel the sector will get destabilized. The current harmony, the current exchange of products, infrastructure, that would get disturbed. The government itself has been using these companies, at the time of elections, there's no increase in the product prices because the government is the owner of these companies. They are able to have that sort of influence to have the actual implementation to suit or not to embarrass the government. One of the companies gets privatized, I feel that apple cart will get disturbed. So, and any prospective buyer, they also know these things that they will have huge headwinds in stabilizing standalone business of BPCL. That could have been the reason for this lack of interest in this sector. And personally, I feel it's going to be a big challenge, and I'll be surprised if the government is successful in privatizing BPCL.
Okay. Mr. Sharma, what about ONGC as well in terms of overall outlook? Has that improved in your view?
Look, again, ONGC, I feel ONGC has not been rightly understood by the stakeholders. ONGC is one unique company in the world which is also horizontally integrated. The entire range of oil field services ONGC is having in-house, and ONGC outsource only to the extent they don't have in-house resources. As a result, there's a lot of stability in ONGC's business. We have seen even at the gas price of 1.79 dollars MMBTU, it's absolutely not a remunerative price. Rather, I don't know how much ONGC is losing on this business. So, but still they are able to maintain stability, and still because of the diversified portfolio, the oil business, and other in-house services they are having, that stability is maintained in ONGC. I feel ONGC is unique in its character. Is again its valuation. At my time, I know this was the first company which had crossed $2 trillion market cap that time, and despite lot of adversities, lot of negativities, ONGC continues to do well. So to that extent, I am proud of this company.
Great. Dayanad and Mittal also joining in from JM Financial. Dayanad, what about valuations when it comes to this pocket of the market, and how are the comparisons they're looking at this point?
Yeah, so over last 2-3 years, maybe even slightly longer, the oil PSUs have got derated, particularly the upstream PSUs, ONGC, Oil India. One, because of government-related decisions, which is more frequent stake sale via ETF or OFS. So that was one key reason. And second, post-COVID, obviously the fundamental earnings of many of these oil PSUs, ONGC, Oil India, because of sharp decline in crude price, the oil marketing companies because of sharp decline in refining margins. So the earnings also took a sharp hit. So both derating plus a fundamental hit to earnings because of COVID. So that has led to all of these companies' valuations are trading at almost 20-30% lower, despite recent rally versus the historical averages.
Dayanad, there's often this debate in the market because a large part of the street is circumspect on whether or not, PSUs should be the go-to right now, whether one should wait for disinvestment, especially when it comes to oil PSUs, while BPCL seems to be making all the right noises when it comes to the disinvestment process. But, the street really wants to wait and watch as well and see how successfully the first disinvestment goes through or not. What I wanted to understand was whether or not you're seeing institutional interest when it comes to oil PSUs.
So, particularly oil marketing companies, HPCL, BPCL, there's a lot of institutional interest, primarily because, as you rightly mentioned, BPCL is getting privatized. There's a high chance HPCL might also get privatized down the line, though ONGC still maintains that it's a strategic investment, not a financial investment. But our sense is, given government had in 2002-3 thought about privatizing both HP and BP, so I think HP can potentially also be a privatization candidate down the line. Indian Oil most probably would not get privatized, as government wants to maintain some control on the domestic fuel market. ONGC is also unlikely to get privatized because it's kind of strategic sector. They are into E&P, and we import 80% of crude. So from a privatization perspective, I don't think ONGC and IOCL might see any major re-rating that way. GAIL may see some stake sale, but I think given gas pipelines also strategic in some extent, so I think unlikely there could be any privatization even for the gas pipelines. There might be some InvT structure through which they might try to monetize it a bit, but I don't think they'll go for a full-blown privatization. So from that privatization angle, I think HPCL and BPCL are two companies which are seeing a lot of institutional interest.
Interesting. Mr. Sharma, why don't you come in here on HPCL and as to what kind of, efficiencies, capital allocation, etc. And of course, what is triggering better capital utilization, in terms of buyback, etc. when it comes to HPCL?
Well, as I mentioned, I have all these three companies, IOC, HPCL, BPCL. I have known these the companies, their talent base in these companies. I have huge respect for these companies, HPCL also, because whatever the takeover or controlling stake purchased by ONGC into HPCL did not really result into any the integration that was intended. HPCL continues to have its separate board, and I'll not comment on that because that becomes a controversial subject. But the fact is, the government wanted that disinvestment. They have been able to get the disinvestment proceeds, but in the process, ONGC's financials liquidity has been very substantially weakened. And if I go back, even in my time, we had given a proposal to government when MRPL was acquired that we can as well acquire HPCL also. And that will give still better integrity. ONGC becomes a vertically integrated company also, the entire value chain, but that was not agreed. And now getting ONGC acquire HPCL, I don't think that integration has happened. HPCL continues to function absolutely a separate entity. So that objective is not achieved, but per se, HPCL, again, the valuation, you look at HPCL, one thing, the price which ONGC paid for HPCL, I would say that was a very, very attractive price. So acquiring that company, again, the fundamental value, intrinsic value of that company is much larger. Again, they are into the large number of retail outlets, refineries, other businesses, efficiency levels, the talent base, the infrastructure. It's an excellent asset, excellent company.
Dayanad, what do you make of the capital allocation changes what HPCL has done? First, they come up with a buyback where government did not participate. Then they've given a fat dividend. Are we in for some rejig in terms of capital allocation? Because one criticism for PSUs always has been that they are poor, pathetic, horrible and terrible in their capital allocation.
Yeah, so this decision by HPCL was well respected by investors and the market. That's visible in the share price as well. So first, doing a buyback is a good decision, and second, just ensuring that it's for only for minority is I think a brilliant decision. This is the first time by a PSU is what I understand. So that was a superb decision, and then they followed it up with a strong dividend a couple of days back when they announced their fourth quarter results. And so that just shows the very strong focus of the management towards the minority shareholders' interest. And we have seen a sea change uh, under the chairmanship of Mr. Surana over the last 5-7 years in terms of how transparent, how open HPCL management has been. Earlier, BPCL was considered to be the leader among OMCs in terms of transparency and focus towards minority shareholders' interest. And HPCL has now kind of caught up with BPCL over the years, and instead, rather, they've exceeded BPCL as well. So I think that's one of the reasons why HPCL shares kind of trades has done quite well over the last 6 months post the buyback announcement.
Okay. Gentlemen, thanks so much for joining us and taking us through some of the factors at play there.